Welcome to Crypto Talk Radio, the podcast for everyday investors like you. Visit us on the web at cryptotalkradio.net. And now, here's your host, Leister.
Thank you for that, Bailey, and welcome everybody out there in Crypto Talk Radio, found at cryptotalkradio.net. A long road ahead and a game I need to get back to. Thank you for joining me here. We'll be digging into a couple of news bits today. It won't take too long. Today's episode will be reasonably short. There is a lot going on, but it's all around the same high-level topics. And then I do have a 101. And I want to make sure I cover the 101 because I stumbled across something on Bleez's channel, and I won't spend too much on the comment, but it got me thinking that maybe people don't know. So it was a good opportunity to share the topic and kind of elaborate. Quick personal. So I cut down two terrible trees in the front of my house. Terrible. Cut those down. I'm going to be planting new trees in the front. And I think it's going to look amazing. And this place that I'm getting them from, if the trees turn out really good, I might get some more trees to build a natural wall for my yard. I haven't decided to go full scope yet, but I'm really leaning that direction as opposed to a hard wall. So there's a lot going on is the point, contractors. And I got veneer put up, now new downspout to replace that, these trees out, the stumps out. And then I'm going to be staining the front brick. And I think it's going to look really good when it's all done. I got some time to go through that. So cryptocurrency is not on my mind because I have my ETFs and they make it's a 42% return. Like, it's crazy. If you're not an ETFs, you really should be. It's my recommendation for you. But I know some of you are all about holding the actual crypto itself. You listen to Da Vinci Jeremy. I get it. Nothing I can do about that one. We'll talk about it. It's fine. Coindesk.com, and we are going to zoom out to the month chart. We're going to go ahead and start with BNB, which crapped down to roughly about $750 recently. Had a major run before, and I was talking about how BNB's price, it was just killing all-time high after all-time high after all-time high. And this is a lesson for folks that it can't last. In this case, BNB's crash was more about Bitcoin's crash. And I say crash, and I put that in quotes because it didn't go that far down. But Bitcoin did go back down, and we're still hovering in that 100,000 to 120,000 mark. That's been hovering through for the longest time that people don't see. And I felt like Bitcoin's price was overinflated. I felt like it was artificial. I felt like Ethereum should be the measure by which whether we're really going up or we're not. But Bitcoin, a low over the past 24 hours, I should say, a low of just shy of $113,000, a high of $115,000, currently around 114. And again, still can't seem to break out of that 120,000 mark in the middle, and we expect it to go up. But right now, it's kind of in this middle stage. Ethereum, my favorite, a low of 3,500-ish, a high of just shy of 3,700-ish, currently about 3,600-ish mark, and it's got a middle trend as well. But then Bitcoin, or Binance rather, just a major drop, because just over the past, just to put in perspective what we're talking about here, Binance was over like $800 not that long ago. I think it was like $820, down to just about $750. I mean, it's amazing the percentage of drop, given a slight drop on the Bitcoin side, and that was mostly liquidations. So Ethereum is still the key. Ethereum is still the measure as to whether we are or are not going up. And I suspect there's going to be more run up. I saw, by the way, Da Vinci Jeremy, he did a video recently, and something's wrong with him, but he basically was just saying, just buy Bitcoin, just buy Bitcoin, just buy Bitcoin. I'm not going to tell you not to buy Bitcoin, but like, geez, there's so many people. There was somebody talking like 100 million per Bitcoin. Like, geez, the level of pressure and hype and messaging is so bizarre. I get it, but it's like, geez. So if you do want to get into those, I'm not going to say they're bad investments because they never are, but something to be thinking about, what they are talking about is that Bitcoin's going to be the measure for the future. I say it's Ethereum. Time will tell. Separate news, Coinbase's base had an outage. It was a very brief outage, only 30 minutes-ish. That happened today. It's been resolved. It didn't happen. It didn't take a very long time. It's their second outage of sorts, but the base layer 2 blockchain still remains one of the top blockchains that's out there. And unfortunately, the government's going to look at that and favor it, even though it's, subject to censorship and a bunch of garbage. So I'm not going to recommend that you get into it, but some might do so. Separately, the news outlets are telling you to focus on cryptocurrency and ignore gold. Here's my gut. I've always said diverse portfolio. To me, a diverse portfolio includes gold, whether that's a gold ETF or gold itself. Because regardless of what, crypto's volatility is still sky high. Gold's volatility is not. So if you do a diverse portfolio, gold is still the strongest foundational asset you can have versus volatile assets. I'm never going to recommend a volatile asset as your foundation or as part of that. I'm going to tell you, have stable assets in your portfolio because it helps insulate against the volatility we know is coming. Some people say Bitcoin might go down as far as $50,000. I don't know if it's that extreme, but it wouldn't surprise me. And so that I'm still going to recommend, regardless of whether it does or not, have stable assets in your portfolio, and gold is one of those. Silver is one of those. Palladium, platinum, these are all reasonably more stable than cryptocurrency. I'm not saying one over the other. I'm saying as part of a diverse portfolio, certainly consider rare metals, whether you do the ETFs or the straight metals. I own some of the straight metals because I think they're strong assets to have. Plus, I'm a collector. Some of these are collectibles, and so I'm collecting them, but there's that gold intrinsic value that cannot be understated. It's going to last long after I'm passed away. That's kind of my thought on the process. But some of these institutionals, you might be curious, well, what are they doing? And try to model that. And it turns out that a lot of the institutionals are turning away from rare metals as part of investment instruments for their portfolio. You might think that's kind of weird. I want to explain the thought process of this. I talked about on an older episode around the difference in investing in cryptocurrency versus mainline assets, including rare earth metals. And that with cryptocurrency, because there's less oversight, less rigor, less scrutiny, it's kind of isolated from oversight. They're going to look at that and say, okay, yeah, we could do, right? So rare metals in this case, there are laws for institutions where they're not allowed, or not they're not allowed, but there's a disincentive for them to hold rare metals on the books over a certain amount, because if they were to do so, it affects how the investments are treated and how they're perceived, and it causes extra scrutiny, unnecessary scrutiny on those businesses if they hold rare metals, and that does not apply with the cryptocurrencies. So this goes back decades, but bottom line is that if you're a company and if you have gold, I'm targeting gold, if you have gold on the books, but you're not actually conducting active business around gold, it turns into a certain type of investment, and then there's financial scrutiny, and they're trying to avoid that smoke, bottom line. So what I'm getting at is that rare metals, in my opinion, because of the fact that they can't hold significant amounts of it, but they can hold significant amounts of cryptocurrency. I believe cryptocurrency is going to be subject to significant volatility over time, and gold is going to be insulated from it over time. Because I think, in my opinion, the law is designed to protect rare metal assets for non-business reasons. Whereas cryptocurrency, I think a lot of the scrutiny is going to start, they're going to try to oversee it like the banking system, right? And so at some point, that shift's probably going to go back the other direction, which might cause a surge on the rare metal side. I can't say for sure that it will, but it wouldn't surprise me if it did. I'm still saying, as part of a diverse portfolio, I strongly recommend that you have rare metals somewhere, whether it's direct or ETF. President Donald Trump recently talked about, or at least was theorized to be talking about, doing an executive order to punish banks that block crypto companies. I talked about this a while ago with the debit cards and the fact that some banks were actually prohibiting transactions involving buying cryptocurrencies. This is about buying. So you want to swipe your card and buy cryptocurrency on your debit card. And some of these banks, I think Chase was one of them, some of these banks were actually declining the charge because they didn't want cryptocurrency charges because they didn't want the risk aspect of it. So this executive order, if it were to pass, is to block those financial institutions from being able to block your transaction in the way you use your debit card. I think it's good. Unfortunately, it's not going to do any good in the long run because all they'll do is just say, okay, well, we'll just close your account then, right? So it wouldn't be blocking you. They just would close your account for some spurious reason. I'm not trying to tinfoil you. I'm saying that the banks don't want the cryptocurrency business going on and they're trying to lock it down. That's what they're trying to do. They don't want increased use of it. What I would like to see instead of something like this, rather than something stopping them from blocking cryptocurrency, what I'd rather see is let's get rid of the stupid KYC if it's less than $10,000. Let's get rid of that. It's stupid. You don't need to scan your ID. You don't need to have a mobile phone. You swipe the thing, you do the thing. Okay. What I'd like to see is that it's distributed through banks itself and force the bank to be able to offer cryptocurrency to its customers. I'm talking the physical presence banks, right? I should be able to walk into the bank and buy the crypto. Okay. So if you do that and you require them to carry it and make it available just like you do with cash, I think you get more adoption, more widespread adoption than something like this. I'm not saying I'm against it. I'm not a fan of it compared to trying to encourage adoption rather than some sort of restriction that they're just going to find loopholes around it. Personal opinion that I have, and it's just me. Maybe I'm in a vacuum. That's fine. Let's go ahead and dig into our 101. I told you it'd be a short episode. So I was looking on, like I said, Bleez's channel the other day, and there was a commenter, user Steely, who said, quote, "The clickbait clown never stops and he's never right." And part of it got me thinking, this is a great opportunity to speak to the flaw of technical analysis, because that's what Bleez does a lot of. And it's not specific to him. It's just in general. Technical analysis itself is flawed. It's a flawed science. And I thought I would share my thoughts on why I feel it's a flawed science. So in order to understand where I'm coming from with it, we have to kind of break down all the components that go into price movement. And this is coming from my lens. Somebody else may emphatically disagree, and that is perfectly fine for them to do that. Hopefully you know by now, and maybe you don't. It's okay. Hopefully you know the main thing that causes a chart to move has to do with a couple of factors, but there's one primary one I want to talk about, and that's total value locked. Circulation of supply matters, but not as much as total value locked. And as a byproduct of total value locked, we have to talk about liquidity. As a byproduct of liquidity, we have to talk about pairs. I don't want to dig too deep because I don't want to waste your time. Suffice to say, when you talk liquidity pairs, there are two sides. It's a pair, right? So there's two sides. We expect a balance in the liquidity pool. There have to be enough of both assets in the pool. When there's an imbalance in the pool, it causes price disruption. The price does not sustain. So let's take an example. Let's take, garbage coin / USDT, right? That's our pair. And garbage coin just launched. Somebody shilled it all over social media. They paid Bleez. He talked about it. They paid Adam Captain. He talked about it. They paid all these shillers. They talked about it. So garbage coin launches. USDT paired. Let's say it's an Ethereum token. So it's on a Uniswap. Usually it's V3 by now. It launches and it has the unreasonable climb, okay? And then the crap that always happens with its garbage token shilled. Now, there's a couple of things. Liquidity amount matters compared to the market cap. And I talked about this with Hachi. In your pair, let's say that people are buying, right, like crazy. And so you expect more of the USDT in the pool. And at some point, there's going to be less of the garbage coin. So it creates a constraint. When it creates a constraint, you start to see when you're on, let's say, Uniswap, you start to see that it'll say price impact. Price impact is basically telling you, and it depends on what happened. It depends on which side of that pool is low. What it's saying is the price is going to shift. If I do this transaction you're asking, it's going to need to impact the price. The way that these services operate is they're offering a price that is designed to entice whatever it takes to rebalance the pool. So again, let's say people are buying and buying like crazy. Okay, so then the garbage coin gets low. Okay, so the pool's getting low. The price goes up. Because what it's trying to do is encourage sells. It wants people to sell because it needs more garbage coin because there's people that want it. There's demand. That it sees this by fact of there's no garbage coin in the pool. So it hits that peak and then it starts to crap. And so now you're getting more garbage coin in the pool and less USDT. And so then what should happen, and this is the flaw of many of these tokens, when the USDT gets low and there's a significant amount of the garbage coin, the price is usually going to crap out. It's going to bottom out because it's trying to encourage more buys. Because now it's saying we got to get this garbage coin out of here. Well, what happens if nobody buys? This goes to the other flaw of the technical analysis. All these calculations you might have heard, right? RSI, MACD, Bollingers, and all these, they make strong assumptions, mathematical assumptions about where a chart's going to go, but it needs enough data to be accurate. So if something just launched, that analysis is worthless. It's not going to do any good because there's not enough data in order to properly, accurately predict what's going to happen. So pre-sales know that. Pre-sales know that there's no way you can really estimate what's going to happen. So the dev can just basically take your money and make a dash, right? Let's say that garbage coin does the pump and dump and then it starts to recover a little bit. And it starts to go in this wave and it goes for a while because, a bunch of shillers are talking about it enough to get people to keep doing it, right? If there's enough time, you'll start to get enough data to do technical analysis, sure. And you'll see people start drawing lines on a chart and it's saying, yep, this is a, descending wedge and a flag and all these patterns. Because the pattern makes the assumption that the pattern should continue because it's a pattern, right? Well, the one thing that many of these technical analyses get or miss, I shouldn't say get wrong. I was about to say get wrong. It's what they miss because they can't assess it is sentiment. Sentiment is the most important, in my opinion, criteria to true analysis. How would you apply sentiment in this case? Going back to my liquidity example of the garbage coin and the USDT and the assumption of buys and sells. Sentiment is something has to encourage somebody to buy other than a low price. Sentiment is we assume people are going to sell on the way up. And we assume that people are going to buy because they believe it's a strong asset. All of these assumptions are volume driven. Well, what happens if the assumptions are wrong? Project's going to crap like Seifu. So the flaw of using straight line technical analysis without considering sentiment is it makes assumptions that cannot be sustained if the project does not have anything strong enough to support it. So you can apply all the technical analysis to, I see people doing, like I'll see Bleece, he does technical analysis on Blocky and all these garbage tokens. Like it doesn't work. You might get some temporary wins, but in the long run, it doesn't work. Just like with Monkey Shit in you're assuming that the dev's not going to just quit. There's too many assumptions that are sentiment based that the technical cannot take into consideration. So a lot of the YouTubers will say, I don't know for sure, but this is what it looks like. They're covering their ass and I celebrate they're doing that. But I wanted to make sure you understood. Technical analysis is one dimension to look at. And it's not the only, it's only one dimension. You have to look at sentiment. If it's a garbage token, if it's straight up garbage and you know it's garbage, if it's being hyped on social media, right? If it doesn't have a product, if it's just about memes, these are things where the sentiment is, and by sentiment, I don't mean hype. I mean sentiment. They're not the same thing. Hype is simply something artificial designed to get an outcome. Sentiment is a long-term sensation from an audience that is organically grown. It is something where you just have a sense of it, and there's a strong enough sense because of what they're doing to try to encourage people to get into the project. Something like a DevE, what is the sentiment? The sentiment is that these guys are scammers because it's been going on for so long and they have nothing to show for it. BlockDAG, what's the sentiment? That these guys are scammers because they're astronauts and shit, right? Sentiment is the most critical thing that nobody pays enough attention to because it's not something you can predict. It's not something you can throw math at. It's not something you're going to get perfect. But it's easy to sense when it's not there. That's the key. When it's not there, it's easy to know that it's not there, which is how I can say, and I'm pretty good on the track record, by the way. I can say, I just saw Blease cover that, it's going to crap. Not because of him, but because I can see there's literally nothing to it. Nothing, sentiment-wise. There's nothing there. It's not about hype, it's sentiment. Terrarium, right? I saw nothing there. And when they put on their site that, hey, we can rip you off in the liquidity, it's like, no, there's nothing here. This is not worth it. You will, at some point, master the art of sentiment-based analysis. But if you're a gambler rolling the dice, it's not going to matter to you. If you're like me and you're just watching for certain opportunities to buy and sell, sentiment, you learn how to look for it and how to smell it a mile away. And then you learn how to take action based on it, whatever that action is. It's simply just, you can't go off those lines. The lines will get it right most of the time if it's an established something like Ethereum. But if you're talking garbage that you're going after, meme garbage, they're not built around those analyses. They're not built to use that logic as you might expect. You could try, but it's not necessarily assumed that it's going to work. What am I getting at? I'm suggesting, and it's up to you, the next time you're on YouTube and you're watching somebody draw a bunch of lines and making crosses and flags and all sorts of other stuff, feel free to watch what they're doing and see that occasionally they do get it right. But understand that there are going to be times they get it wrong, and why. It's because they're ignoring the sentiment piece. The sentiment piece, to me, is the critical piece that they refuse to cover, but I think it's the most important part of the whole thing. Without it, you're always missing key opportunities to buy and sell. And that's just the way it is. It's not straightforward math like you would see, even on the stock market and bond side. It's the same thing. Sentiment is still a criteria there too. Some people choose to ignore it. I don't. That's how I roll. In closing and in summary, we have an expectation of positive movement, but we've just now seen that even despite Donald Trump's fervent efforts to push cryptocurrency to the moon, none of that happened. We had run-ups on Ethereum. It still didn't hit its all-time high. Bitcoin smashed its all-time high, but for different reasons. Then it crapped back down. We know the potential is there. We know the demand's there. We know the long game is there. And that's the important takeaway. It's a long game. We're not in the short game. It might seem like it for these short pumps, but anybody paying attention would have known there's no way we're hitting these high numbers yet. End of the year, strongly probable, but not guaranteed, especially if we don't get a Fed cut. I think that's a key thing for cryptocurrency, is to get a cut, in my opinion. And we haven't gotten it yet, so we have to see what that looks like. Always insulate yourself from this disruption. Invest only what you can afford to lose, for sure. But most importantly, diversify. Get a bunch of different things, because different things are moving. Not everything's going up, not everything's going down. Different things are moving, and the worst thing you could do is diversify your portfolio. It's the worst way to win is diversify, because win doesn't mean become a millionaire. Win means you don't lose. Once you flip your thinking, you realize just how interesting and how easy this is. You got to flip it around, okay? Your job is to make sure you don't lose. Some people are gamblers, and I get it. But most, you're logical people. You're going to listen to Leister, and you're going to say, he's got a point. Let me start diversifying the portfolio. And if you're interested in doing that, again, I can't recommend gold enough. I do recommend everybody hold some of that in your diverse portfolio. Not the only thing. Don't YOLO in anything, but just as part of a diverse portfolio. You can't go wrong with it. I love it. I think it's great. And I think it's going to get to a world where if you get it now, you're going to learn to appreciate it in the long run.